This video continues with part 2 of the EasyStep interview. On this page, you'll choose the month for the start of your fiscal year. The fiscal year is a 12-month period used for calculating your company's yearly financial reports. People usually choose January as the start of their fiscal year to match the income tax year. So I will leave it at January and click Next. Setting up a company file administrator is optional. If you set up a password, whenever someone opens the company file, QuickBooks asks for the password. Certain actions like setting QuickBooks preferences can be performed only by an administrator with the password. If you don't set up a password, anyone using your company file can go in and change preferences. And just one thing to point out, the password is case sensitive. I will leave them blank and click Next. Now QuickBooks is asking you to choose a location to save your company file. And when you click Next, you can navigate to where you want to keep your company file, or you can choose the location that QuickBooks selects, which is company files inside the Intuit folder. That's fine with me, so I'll click Save. Takes just a minute or two. In the next few screens, QuickBooks asks you questions about how your business operates. In asking these questions, QuickBooks is setting preferences that determine which features you'll need. And you can change the preferences at any time. This is just to get you started. So I'll click Next. And QuickBooks is asking what you sell. And it gives examples of the kind of businesses that might do services only, products only, or both. And I will choose both. And click Next. And QuickBooks usually selects the answers to these questions based on your business type. And usually those are okay. If that answer is okay, you just click Next. Do you want to create estimates? Yes or no? Using billing statements, it's a good idea because you can also use them as reminder statements, so click Next. And progress invoicing. This is useful if you do projects by milestone. And for this company, it will be no, so click Next. And do you want to keep track of bills you owe? Yes, that's a good one to keep as yes. Click Next. And tracking inventory. For this company, I'm going to choose yes. So QuickBooks provides some pretty good examples here on what type of company might use inventory and what company might not. For this company, I clicked yes, and I'll click Next. And next you decide if you want to track time. And if you have employees or use contract employees, you should probably click yes. So I'll go ahead and click yes. I want to keep track of time, and I'll click Next. And I don't have employees, so I'll leave it as no. And now the next steps are all around setting up your chart of accounts. So we'll go ahead and click Next. Before you can start using QuickBooks for keeping your financial records, you need to choose a date to use as the starting point for entering your business transactions into QuickBooks. There are a few ways you can go, so when you're ready to set up your own company file, read the PDF titled Gathering What You Need, located in the Working Files folder. And at the end of that PDF is an explanation of how to choose your start date. And for this company, I'll use today's date. And here are the accounts in your chart of accounts that QuickBooks is recommending you have. So you can scroll through the list. If you find one that you want to include and it doesn't have a check mark, just click in the check mark field to select it. If you find one that's checked and you don't want it, click the check mark to remove it. I want to point out my favorite account, and that's Ask My Accountant. So you should probably keep that account, and you can use it whenever you're not sure about which account to assign to a transaction. And it will be easier than trying to fix a mistake later. Okay, let's click Next. The next video will go over how you can set up your company information such as bank accounts, customers, and vendors in bulk. So let's go ahead and click Go to Setup, and we'll start the next video from there.